The Bank of Canada has cut interest rates, and it's clear from their statements that they don't have a clue what is about to hit the Canadian economy. So let's get into it here. So Bank of Canada cuts benchmark interest rate by 25 basis points as Trump ratchets up tariffs. I mean, it's just as if it's just about that, right? Because they've been cutting for a while here. So let's take a look at what's happened on a chart here. So you can see the interest rate cut brings it down to 2.75%. To give you some historical context on where we are, you're talking about rates in 2008. That's where we are. So it's still pretty high when you consider all the leveraging up of households and businesses during this period here. It was all, mostly anyway, at this period here, whereas 0.25%, and still lots of people are renewing their mortgage and they're going into rates that are way higher. And what we're talking about here is just the overnight rate, remember? So obviously the overnight rate is just one interest rate. There are many. If you're taking out a 5-year fixed rate mortgage, you're going to pay an entirely different rate to that. So if we look at what's happening with the Canadian dollar here quickly before we go through what they said and actually what is going to happen with the economy, looking at real hard data, you can see that the Canadian dollar is kind of trading flat on the day. It's still up as of recording this live stream right now. It's up just 0.13%. So pretty much flat on the day. We'll continue to monitor what happens here. It did have a negative reaction off the rate cut, but it was also positive for a little bit. So we'll continue to see. It could end up being up on the day. And if you look at what's happening with the dollar, actually, DXY is up 0.27%. So that is interesting considering the euro is off against the dollar, but the Canadian dollar today doing the opposite again, and it's actually up. So it seems like complete opposites that we're seeing here. So let's actually see what the Bank of Canada said here. So Bank of Canada reduces policy rate by 25 basis points to 2.75%. The Bank of Canada reduced its target rate to 2.75%. The Canadian economy entered 2025 in a solid position, guys. It was just in a great position coming into 2025. I mean, we only had GDP per capita that has been stagnant now for a decade, essentially a lost decade. If you look at the World Bank data on GDP, guess what? It's not growing. Canada 2024, 2.16 trillion, I'm guessing, and this is 2.16 billion you've got there as well. So it's essentially unchanged here. And the GDP per capita is the interesting one because it shows the distortions that have been created in the economy by population growth, because that does not show up in the GDP. In fact, it shows up in the GDP as a positive, even if those people can't find jobs, which is very interesting. So after a period of solid growth, the US economy looks to have slowed in recent months. US inflation remains slightly above target. Economic growth in the Eurozone was modest as well. So it says here as well, however, heightened trade tensions and tariffs imposed by the United States will likely slow the pace of economic activity and increase inflationary pressures in Canada. One is gonna offset the other, and that's what a lot of people don't understand. So yes, there's gonna be inflationary pressures, but the fact that the economy is just being smashed and smashed and smashed here is just gonna mean to demand destruction, which will actually offset any of those price increases that you might see show up in inflation data, which I'm sure we're going to see in the inflation data that's coming, and actually might put the Bank of Canada on edge. But you have to remember here that you're getting massive demand destruction because so many people are going to lose their jobs. I mean, it's just so obvious that you can't do business in the environment right now. A lot of factories are just going to shut down because they don't know what the hell to do. Like, are we selling at a 25% tariff, a 50% tariff? Like, where are the tariffs? Canada's got tariffs like They haven't got tariffs. Like, what's going on? Like, it's just so on, off, and for different components, it's becoming increasingly hard to follow. So what kind of business environment does that create? So layoffs are definitely going to come. And of course, we know all of the layoff data is lagging. So it's lagging far behind. So you look at the unemployment rate right now, you could say, oh, it's been flat since September. This doesn't really account to the population growth either. But the reality is this is going to go up. It's so obvious. You've even got the Royal Bank that is laying off people, and a lot of people are going to pin that to the HSBC merger. But the fact is, if the company was doing really, really good and they were growing, they might be able to grow into the extra workforce that they took on with HSBC. But that's not the reality that's actually occurring. The reality is everything is contracting, and that's exactly what happens during a recession. People need to prepare for that instead of trying to sugarcoat it like all these politicians are just saying, yeah, we're going to win this. Like, we're going to win a trade war with the United States. I mean, come on. Yeah, Canada has leverage. Anybody can admit that. But you're never going to win a trade war with the United States. I hate to say it. And it's just people, every time they throw a jab, they're just putting another knife in their back. I mean, it's so ridiculous what is going on. Now, I want to show you and talk to you about this, which is the yield curve, because we went over this way back in 2022. Many of you will remember on this channel that I brought this up, and I've been on about it for years now. The fact that the yield curve was the most inverted that you'd ever seen since the 1990s recession, which I'll add was one of the deepest recessions in Canadian history. So not a good sign when that happens. And the yield curve has been an excellent predictor of recessions and also how bad those recessions are going to get. So if you look at what's happened here and where the yield curve was, so you can see it inverted massively way back in the 1990s. It inverted right before the dot-com bubble burst. It inverted right before the GFC. And it nearly inverted when you had the 2015 stagnation event, I would call it. It wasn't a technical recession, but it was definitely a stagnation event. So now what's really interesting is when the yield curve uninverts, that's typically the market telling you that, guess what, that recession is coming within the next 6 to 12 months. And I want to highlight that when the yield curve actually uninverted in Canada, you're talking about 4 or 5 months ago. So we're getting into that point where we could actually be in a recession right now. And I think it's pretty obvious at this point to all of us. I mean, I've been saying it since 2022. Canada has been in a recession. It's just really how bad this is going to get. Is it going to get into depression level territory? I think it's highly likely when you look at what's going on, all the people that have been coming over to the country, quite frankly, and the jobs and the economy just don't support it. So there's massive economic distortions that have been created from this. And obviously, it will be very interesting to see what happens. And obviously, we think unemployment probably just going to continue up here. So we'll have to continue to monitor that one. But what's really interesting is the Bank of Canada doesn't really seem to know what's going on here. If you look at their words here, it says, while economic growth has come in stronger than expected, the pervasive uncertainty created by continuously changing U.S. tariff threats is restraining consumer spending intentions and businesses' plans to hire and invest. And I would agree with that, but the economy hasn't been strong. That's the thing. The Bank of Canada has rates where they are right now because they think the economy is strong, and they still believe that inflation is a big risk. And I think there's a lot of tailwinds to inflation right now. But if you're going into a depression, it's actually deflation that could be the big risk here. And that's what they're not looking at. Now, the thing is, this all obviously is subject to change depending on stimulus programs. You know, what's World Economic Forum Mark Carney going to do? Is there going to be an election? Are things going to change for the better? We hope so. But the reality is, if they're tabling pandemic stimulus again, well, that could change things drastically. So it's a evolving situation here that we'll have to continue to monitor. Anyway, guys, I want to thank you so much for being on this live stream. If you've enjoyed this video, I'd highly recommend you check out that video there. If you want to help out the channel and also get the best VPN